Hello guys, I'm Paris, the options guy, and welcome to the No BS Trading Podcast. And this is episode number 5 of the podcast. And this week we are going to talk about how the US CPI data came out, and on the same day how the Fed meeting went and what were the major outcomes that came from it. But then we are also going to talk about what is happening in the IPO space, where we have 3 IPOs coming this week. So yeah, a very busy week over there. And in the end, I'm also going to teach you one concept which will help you become a better trader or an investor. So stick around till the end because this is going to be a very helpful podcast for you. But without any further delay, let's just start with today's episode. Starting off with what happened in the previous week, we had the US CPI inflation first on Wednesday, where the US CPI inflation actually came a little lesser than expectations this month. After a long time, US CPI coming below expectations. So US CPI coming at 3.3%, expectations were 3.4%. US core CPI coming at 3.4%, expectations were at 3.5%. So this is a bit of a good sign, not a very good sign, but the concerning sign is that US super core CPI inflation is actually still going up. It went from 3.8% in October 2023 now at 5.01%. So it is still growing at a much faster pace as compared to US CPI and core CPI. It is not growing actually, but it is actually just going up, where the US CPI and core CPI are not moving at all. So this is the concerning sign which we need to look at, is that super core inflation is not coming down. And I had said this in the previous episode also, that look at the super core inflation. That will give you a much better idea of what is actually happening. Now why US CPI inflation and core CPI inflation are down is that a lot of things that are not really very essential to you are also counted in this, and that's why when those things fall in price, they affect the CPI inflation and core CPI inflation numbers. And that's why if you see, the CPI and core CPI inflation numbers came down a little bit, but still super core inflation, which is a sort of, you can say, a sort of just essential goods of the economy that are required for living, has still gone up. So this is not a very great sign. Now yes, the markets did rejoice on these numbers, and the markets were going up. And if you also see the prediction markets. Now what are prediction market? Basically people predict how some events are going to pan out. So in prediction markets, the chances of rate cuts went from one rate cut in 2024 to 2 rate cuts when the data came out. So definitely market looking at this data at a good with a good, you can say, looking at this data as a good sign. So after that, however, just few hours after that, the market actually didn't get such a good news with the Fed meeting, where the Fed interest rate decision, and then there was the press conference, you can say, or the sort of, you can say, press release that the Fed does. But yes, Fed interest rate change, the rates remained same, and it was expected that the Fed would keep the rates unchanged. But I had said that keep an eye on what the Fed says after the interest rate change, and that is where the Fed disappointed the market. They increased the inflation forecast for 2024 from 2.4% to 2.6%. This was the first bad news. They also show that they are now expecting the Fed officials. So the US Fed is made up of many officials from different US states, right? So now the median forecast, the forecast of all of those officials, is showing just one rate cut in 2024. Market changed its expectations just a few hours before this Fed meeting, that they were now expecting 2 rate cuts this year. But the Fed came in and said that no, We are just expecting one rate cut this year. So that was the second disappointment for the market. Now the third disappointment was that they also increased the core PCA inflation estimate up from 2.6% to 2.8%. So another blow to the market, and that's why if you see Dow Jones and basically the US markets did see a sell off in the end of the day when all of this data came out. Another thing that was sort of a bit, you can say that was interesting, is that the median forecast of all the Fed officials showed that they were expecting 100 basis points of rate cuts in 2025. Now the 100 basis points of rate cuts is actually pretty less as compared to what we were expecting at the start of this year. So now in 2025 also there is a bit of less amount of rate cuts that the market is expecting. So definitely Fed coming in and disappointing the markets a little bit. Inflation data came and propped up the markets, and then Fed came in and said no, it is not such a good story. And I think some of the Fed officials are realizing that inflation is still not under control. So I mean, you can say that inflation is coming under control, but looking at the super core inflation numbers and the actual numbers, if you look at just the actual things in the US economy, like a single thing like the gasoline prices, you can say, or the food prices, they in individuality are not coming down. Together, when they are combined and this core inflation, this inflation CPI number is coming out, it is coming out a little less, but individually they are not going down so fast, and these are the things that matter the most. Now if you see over here, in CPI inflation number, there will be a lot of things which are not really necessary for living life, like you can say, I don't know, something like CD players or music players, I don't know, but you get my point, right? A lot of things will be included in that which are not so essential in living life, but still those numbers are included, and if the price of those things go down, the US CPI numbers also come down. But in actuality, if you just see, open any sort of chart, open any sort of price chart of any sort of you can say commodity which is very essential for living, like you can say eggs, wheat, or any sort of thing which is essential to living life, and you will see that the prices of those things are not really slowing down or coming down very fast, and that is the concerning thing that needs to be watched out for. So these CPI numbers can also be pretty deceiving. They are not something which are very foolproof, and which will give you a very clear view of where the inflation is going. The actual inflation can still be miles away, and what the sort of inflation that the general public might be experiencing could be miles away from this number. So you have to sort of dig deep and see what exactly is driving these inflation numbers, what component of the inflation, this CPI inflation is bringing down inflation, and what component is bringing up the inflation. So that is also a very important thing which you need to research or look into when you're looking at CPI numbers, because the way these numbers are calculated, the method that is used is not completely foolproof. So I hope you get my point. But yes, on market, if you see, there was one more data point that came on Friday which was a little less important, but which is also something that you should keep in mind, is the consumer sentiment number. Now this is basically, you can say, a number which shows that how, you can say, how confident the consumer is about spending and all those stuff. So it came out at 65.6, and the estimate was 71.5. So this 65.6, the reading that has come, it has lowest since year 2022. So the consumer sentiment is the worst in the last 2 years. Now you can say that the economy is doing pretty well, the CPI numbers are in control, but consumer sentiment numbers are saying something else to you. And these consumer sentiment numbers are actually taken from the survey of consumers themselves. So the consumers are surveyed, the general public is surveyed about how they feel about spending or about the economy and all that stuff. And these numbers are the worst in the last 2 years. So this can also tell you a lot of things. You cannot just believe on plain numbers. You have to dig deep and find out what is actually happening. And that's why I was also pressurizing that the US economy might not pressurizing, but I was stressing on the point that the US economy might not be in such a good situation in which the numbers are telling us. But yes, definitely not such a great consumer sentiment number that has come out. And one more thing is that it is likely that the union budget for India might be held, basically the Indian, you can say, government, the union budget of 2024-25 might be held on July 22. Now these numbers are not complete. These are sort of, you can say, a lot of people are some sources have said that the union budget might come out on July 22nd, so that is in third week of July. So yes, we'll keep an eye out on it, and once we get the fixed date where the you can say the official date, I will definitely update you guys on the podcast. But yes, it looks like the budget might come in July, might come on July 22nd, which is still a little bit more than a month away from now. So yes, keep an eye out on that. If you want to buy budget stocks, if you want to buy stocks based on the budget, or what can be announced in the budget, buy it before the budget, because don't expect to buy it on the day of budget or after the news is announced, because a lot of news or a lot of people start, a lot of big institutions also start taking positions before the budget itself. They do not wait until unless some announcement is made, only then we will go ahead and buy. It is not like that. A lot of institutions and a lot of people also buy stocks, buy some individual stocks, and bet on some sector before the budget itself. So if you want to buy, you can definitely buy maybe at the start of July also. And even right now, it is a good time to take a buying position. Any sort of dip that you get in the market, you can think about taking a buying position. And one more thing about this union budget, which I'm going to talk a little bit more, just a little bit more, is that this budget will most probably bring some big changes. Now, why am I saying so is that whenever a government, whenever the elections are about to come, the general elections, before the budget, before those elections do not bring very big changes to the economy, or not very big changes are announced, because the government fears that it might, bring some big change, and people might not react to it very in a good way, and that might lead to some bad, you can say, election results. And that's why before the elections, you'll see not a lot of big changes are announced. But in this election, a lot of big changes might be announced for the next 5 years. So keep that in mind. And so this election, sorry, not this election, but in this union budget, a lot of big changes might be announced. So yes, definitely keep in mind, and I'll keep you guys updated what might be the big changes that might be announced, and what you can expect, how you can invest before the budget once we get close to the budget. Now let's move on to what is going to happen in the next week. Talking about next week, starting from Monday, where we have the holiday in Indian markets, so Indian markets will not be open on the account of Eid. So to all of my Muslim brothers and sisters out there, happy Eid. But yes, after that, on Tuesday, we have the retail sales data, the US retail sales data, and the expectation is at 0.2%. Now this data might affect or not affect the market based on how it comes. If the data comes out worse than expected, let's say now the expectations are 0.2%. So if the data comes out at say 0.0%, that will be bad, and that will affect the markets. So keep that in mind. If the data comes out as expectations, there won't be any big effect on the market. But if the data comes out worse than expected, the market will see a little bit of negativity, and if the data comes out better than expected, the market will see a bit of a positivity. Then on Thursday, we have the Bank of England interest rate decision. Now this has all of a sudden become a bit of an important event, because if you see, the ECB actually did a rate cut after a long time. So if the central banks start cutting rates, this can indicate that even our central bank, the RBI, can also may also start to cut rates. Now the RBI, in its previous just the meeting, the interest rate decision that the RBI took just a week ago, the governor said that they might take cues from the global central banks, but they will not exactly follow the path that those guys are following. So I'm not saying that it might really, like, if let's say the Bank of England cut rates all of a sudden, if they do a surprise rate cut, the RBI will also follow. But what if they do a surprise rate cut? What will happen is that the European markets will definitely rally a lot, and because of that we can also see a bit of a spillover effect, because of which we can also start to rally. So keep an eye out on Bank of England's interest rate decision. Chances are that they will keep the rates unchanged, because the inflation over there is also not really under control, so they will also keep the rates pretty much unchanged. But just in case they decide that they want to cut rates, then we can see a very good rally in our markets also, sort of a spillover effect, you can say. So after that, we have on Friday the US manufacturing and services PMI. So if it comes below 50, markets will definitely see a bit of you can say a bit of more negativity, because it is again indicating that you can say the economy is starting to slow down, which will not really be a good sign for the markets. So keep again manufacturing services PMI numbers in your mind, because both of these are going to come on a single day, so they can definitely also put a lot of effect on how the market performs on Friday, and then how the market opens on Monday next week. So yes, those are the events that are going to happen in the coming week. Not much of the events that are going to happen, but still a bit of important events. But yes, now let's move on to what are the IPOs that are going to come in the next week. Now, starting off with the IPOs, we have three IPOs this week. So, yeah, a very busy week in the IPO side of things. Starting off with DEE Piping Systems and Acme Fintrade India. These two IPOs will come out on June 19th and will close on June 21st. So, Acme Fintrade India, first let's talk about that. Is a 132 crore IPO, and all of the money is going to go into the company. That is, company is issuing fresh shares, which is good. But DE Piping Systems is a 418 crore IPO, out of which 325 crores will go into the company and rest will go to the promoters. Still a good amount that is going into the company. But yes, what can you expect from both of these IPOs? But first, before expecting, let's talk about the third IPO, which is Stanley Lifestyles IPO. Okay, and this IPO will come out on June 21st and will close on June 25th. So this IPO is a 537 crore IPO, out of which 200 crores will go into the company and 337 crores will go to the promoters. So out of these, all of these three IPOs have a GMP of 20 to 25% right now. So from the GMP perspective, that is from the gray market premium perspective, if you want to take just listing gains and get out on day one itself, it is not such a lucrative bet on either of these three IPOs. So from the listing gains perspective, you should not apply in any of these IPOs as of now. However, if you see that the listing gains have definitely increased and gone above near 50% by the time the IPO is closing, then you can think about applying in any of these IPOs. But until and unless the IPOs gray market premium is somewhere near 20-25%, it is not worth applying in any of these IPOs. Okay, so from the gray market premium perspective, not a great bet on any of these IPOs. But now talking about what can you do in terms of investment? Should you invest in these companies by investing by applying for the IPO? So one thing that you will see is that basically DE Piping Systems over here. Let's talk about that first. If you see, In 2021, the revenue was 513 crore. In 2022, the revenue was 470 crore. In 2023, the revenue was 615 crores. So, and again, in December, at the end of December 2023, the revenue is 557 crores. So, it looks like the revenue and the, you can say, the profits of the company are pretty volatile, because if you see, in March 2021, the company had the profit after tax of 14 crores, in 2022 8 crores, in 2023 13 crores, and in December, by the time of December 2023, we had a profit of 14 crores. So a very volatile, you can say, financials of DE piping systems. And one more thing, if you see, is that net margins of the company are very less, right? What do I mean by very less? The company is earning 513 crores and as revenue, but at the end of the day, it can only save 14 crores in net profit, so which is very less. And because of that, it is not really worth applying in piping systems as of now. What you can do is that wait 2 to 3 quarters to see if the results improve. If the results do improve, then you can think about applying in this IPO, because what this company does is that it is in sort of a very, you can say, niche segment of the market, which is very hard to access, or which is, the barriers to entry into the sector or into the thing that the company does. So it sort of provides a specialized piping solution for nuclear power plants or oil and gas plants or chemical plants. And this sort of work that the company is doing, the barriers to entry are pretty high. So yes, the company does has a very good you can say sector in its hand, but in itself, the company is not really performing that great. Net margins are extremely less, in my opinion. Not extremely less, but still not very great. So what you guys can do over here is wait for 2 to 3 quarters. Do not apply in the IPO. Wait for 2 to 3 quarters. See if the results are getting better of the company, if the net margins are expanding, then think about applying in this IPO. But at the time of writing, at the time of this IPO coming out, it is better to just stay away from this IPO, because the valuation at which the IPO is also coming is pretty aggressively placed by the company, if we compare it to the growth that we are seeing in the company. So DE piping systems, it is better to avoid this IPO. Talking about Acme Fintrade, if we see 132 crores IPO, now this is a company which provides loans to MSME or small businesses in rural and semi-urban areas. So not very big ticket loans, very pretty small ticket loans that it provides. And it also has a, you can say, a good amount of reach, but still not a very very big NBFC. So it is an NBFC, but still a good amount of reach, not a very big NBFC. But same as before, if you see the company, same as DE piping systems, the company has very volatile results, because if you see, in FY21 the company earned 86 crores, FY22 67 crores, FY23 69 crores, and as of 9 months of FY24, the company has earned 53 crores. And at the same time, profit after tax hasn't also increased. In fact, the FY21 profit after tax and FY23 profit after tax are pretty much the same, so not a lot of growth. So that's why again, same thing over here also, not very volatile results, very volatile results and not very stable results. You cannot really see a very stable trend in the company. And also one more thing is that the competition in this space is a bit high, where the company is trying to make a business. The competition is a bit high, and unless the company does something which can bring in a lot of value for its customers, and also in the process bring in a lot of customers to the company, it is not really going to perform very well. So that's why it is in the terms of investing side, I would say avoid this IPO, because again, it is a bit overpriced as compared to the growth that we are seeing in the company. So same thing as GE piping systems, not a great IPO in my opinion. If you want to still invest in this company, I think most probably you will get a very good correction in this company also once the IPO is done, and once the IPO is listed, chances are you will get a pretty good correction because the IPO has been listed pretty aggressively, in just ROE of 5.6%. So not really a great ROE also, and that's why I think it is better to wait a little bit more because if you want to invest now, there are much better companies in my opinion that you can think about, which will give you the same exposure that this company same exposure to the business and the sector that this company operates in. You can definitely search any sort of lender that lends to rural and that is working in rural and semi-urban areas, and you will get a lot of better companies which have better financials than this. So I wouldn't bet on this company, and I think staying away from this IPO is also a good deal in terms of financial, in terms of investment as well as trading or listing gains perspective. Now, last IPO is Stanley Lifestyles IPO, and this is a bit of a interesting company. So this is a furniture company. It makes furniture, and it makes luxury furniture, luxury and ultra luxury furniture, and also super premium furniture. Now this segment is really, I really like the luxury goods segment because I think luxury segment, the company that sells luxury goods, is pretty recession proof because the people who can afford this type of luxury goods, the customers that these companies have, also are pretty recession proof. These guys have a lot of, if you look at someone who is a millionaire, right? He will have many sources of income, and chances are that the very top cohort of the people who are earning the most, they are pretty recession proof. They earn in a recession, they earn when the market is booming, they earn when the economy is doing great, they earn all the time. So that's why I really like the luxury segment. Any type of luxury, be it furniture, be it watches or whatever, be it any sort of luxury clothing also. So really the company is operating in a very good space, and I think they make a lot of things. They make basically chairs, recliners, cased goods, kitchen and cabinets, mattresses and beds. So they have a pretty good portfolio of products also. Only thing is that I found the growth of the company again to be not that great in the in FY24 as of now. So if you see, the company over here has made a profit of 18.7 crores as of first 9 months of FY24, and in FY23 they made a profit of 35 crores. So even if we expect, let's say, 7 to 8 crores extra money that has made in the next quarter, assuming that it is a very good quarter, still it cannot even reach the levels of 2023 profitability, FY23 profitability. So I would say wait a little bit. However, you can apply in terms of investment also. The company is pretty good. Only problem is the PAT margins, and that's why I'm saying wait a little bit, because if we can see a bit more improvement in the financials of the company, then we can really expect this company to perform very well in the coming years, because I really think that luxury segment, be it of any sort of luxury goods, can really perform pretty good in the coming years in the Indian economy, because now is the time where a lot of people will enter into that luxury class, where they earn extremely high amounts of money. So I think a really good sector that the company is operating in. However, I would say wait a little bit. Do not really hurry. You will definitely, I think, get this IPO at a much better price. Why do I say so? It's very simple. Because the company has a bit of a volatile result, has had a bit of volatile results in the first 9 months of FY24. So if we can wait a little bit, just a little bit, then we can, I think, really get this IPO at a lesser price also. And since the grey market premium is not that high, chances are that it will open near flat or a bit, just a bit, you can say with a small premium. So you can still acquire it in the open market when the IPO gets listed. So yeah, guys, for Stanley Lifestyles also, not really. I'm not really interested in applying for this IPO, and unless you are really like desperate to apply in any sort of IPO, I don't think you should apply in this IPO also. So definitely three IPOs coming this week, but none of them really blowing our minds or blowing mind blowing or anything. All of these companies are pretty lackluster except for Stanley. If I think Stanley can get better over time, but yes, as of now, as of the time of recording this podcast and this IPO coming out soon, I don't think it is a very mind blowing company. Now, talking about the market analysis or the technical analysis for the major indices for the coming week, if we see Nifty closing up 0.75% this week and Bank Nifty closing up 0.4% this week. And as I had said that until unless we go above 50,000, we will not see that big of a strength. And Bank Nifty closing above 50,000 just on the last day of the week and just 2 points above 50,000. So still, if we cross this high that you see over here, that is when Bank Nifty can catch a lot of momentum and really get a lot of strength and go on par with Nifty. So what you guys can do in this week is going to be very simple. Let me go ahead and remove this trend and before that. But yes, if you see, now the market is looking pretty bullish, except for Bank Nifty. It is now Bank Nifty is also still bullish, but Bank Nifty might be in a bit of a consolidation. But talking about Nifty, Nifty has already made a new all-time high. So Nifty now looks pretty bullish till 24,000 also, no problem in that. And as I had said, just the day after, actually on the day of the election results itself, that if we close about 22,600, we will go till 24,000. And I still stand by that. You can say the prediction that I made on this day over here. And if you see next day itself, we close about 22,600, then now we are ready to go till 24,000. And it looks like market is also looking good to go till 24,000. So any dip that we get in this week near 23,300 to 200, we will use that dip to take a bullish position again till 24,000 on the upside. Now the very good thing which can happen over here is that if we break 23,500 on the upside itself, on Monday, on Tuesday itself, either by opening with a gap up or again opening flat and crossing it, then we can start to make a base near 23,500 to 23,400 itself, and from here itself we can start to move up till 24,000 on the upside. Now the way markets have closed, the way Nifty has closed at the last day of the week, it indicates that there is again still more momentum left on the upside, and chances are that market might continue to move up in the coming week also, no problem in that, because as I said, that market has trapped a lot of people on the downside by making this a very big red candle, and a lot of people would have gotten trapped on the downside. So now chances are that market will go up pretty fast also from here. But yes, any sort of dip that you get on the upside, you guys can on the downside, you guys can go ahead and take a bullish trade from there. What might not happen over here is that market might show you, might not give you a straight upside move over here. What market might do is give you pullbacks over time and then go up, so basically making a higher high and then going up till 24,000. Any sort of dip that you get, think about taking a buying position and not a selling position. And if you want to sell, sell for sell less quantity or sell for small points. Take targets quickly in selling, and as soon as you get a dip, buy for a very big target on the upside. Now I also have some positions which I've held from this day itself, and I'm still holding, since they are monthly positions. So I'm still holding. I have a pretty good profit running. But yes, this week's stance will again continue to be bullish. Where will we get bearish? Bearish is only below 23,200, and that too only till 23,000 on the downside. So we will get a very good momentum selling, 200 point selling momentum only below 23,200. If we go below 23,200 and start to make negative price action, and for Bank Nifty it will be 49,200 to 49,000. If this level breaks, then chances are we will get 1,000 point more momentum in Bank Nifty, since Bank Nifty looks a bit more weak, and then we might see a consolidation for quite a while and then start to move up. So if the market has to move up, market will need to survive at higher levels for more days and then start to move up. It should not give a very big correction. Even if the market just consolidates at higher levels over here and Bank Nifty somewhere near 50,000 for a while and then breaks out, then Bank Nifty can also go till 52,000 and Nifty can also go till 24,000 very easily. So yes, for this week's stance, it is buy on dips. So I hope the next week's technical analysis view is clear. Now let's move on to the concept that we are going to learn today. So the concept that we're going to learn today is known as share split. So it is a very simple concept, but it is still important. Now, as the name suggests, a share split is when the company splits the face value of the share. So let's say the share has a face value of 1 rupees, right? So the company can split the share, split the face value of the share to 0.5 rupees and give you 2 shares instead. Did you understand what I just said? If you have a share whose face value is 1 rupees, the company can split the share into 2 pieces and give you 2 shares of 0.5 rupees. And that is what a share split is. Share split is. So what usually happens in a share split is, let's say the share split is 1:1, right? So what happens is that for every 1 share, you will get 1 share extra. Right now, it is not really that you are getting an extra share or a bonus share, but you are basically splitting your shares in 2 pieces, and so you get 2 shares of 0.5 rupees of face value 0.5 rupees rather than just 1 share of 1 rupees. Now, why do companies do share split is because sometimes shares can get very big. The price of shares, the market price of shares can get very big. I'm not talking about face value, I'm talking about the market price, the price at which the share trades every day. So sometimes the shares, the price of the market price of shares can get very big, maybe 20,000, 21,000 rupees. So buying 1 share of 20,000 rupees is not really something that a lot of people can do, right? In order for a lot of people to buy shares, right, the company can split its shares so that more people have the ability to buy the shares, since price of a single share can get cheaper. Let's say the share was of 20,000 rupees and it has a face value of, let's say, 10 rupees, right? The market price is 20,000 and the face value is rupees 10. Now what the company can do is that it can split the share in 1:1, so that so now it splits the shares of the company in 2 parts, and the face value gets from 10 rupees to 5 rupees, and at the same time the market price of the share also gets halved, because now you have 2 shares. So that's why if the face value is also getting half, then the market value of the share also gets half. So the share goes from 20,000 rupees to 10,000 rupees. Now you might be saying, it might, how is that fair, right? My value, if I've invested the share at 20,000 rupees, now it is becoming 10,000, so I'm losing 10,000 rupees. No, because now you have 2 shares of 10,000 rupees, not 1 share but 2 shares of 10,000 rupees, and that's why it is called a share split, because you're just splitting your shares. You're not decreasing their value, you're just splitting them and making them smaller in size so that more people can buy, and that is share split for you guys. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you waited till the end of this episode, and yeah, that was it for this week. If you have any sort of recommendation for the podcast, what must be improved or something that you want added in the podcast, please do let me know in the comments, or you can also DM me on Instagram at @the_options guy, and there is also link in the description, so you can go on my Instagram and also DM me or just comment, and I will make sure that those things are improved or added into the podcast. But yes, that was it for this week, and I'll see you in the next week soon. Bye bye.